There are many instances where a minor amount of cash is needed. This is where a business will use petty cash funds. Petty cash funds are an amount of cash kept on hand to pay for minor expenditures. The size of a petty cash fund generally varies across different companies. The process involves three main activities. Firstly, establishing the fund. Secondly, making payments from the fund. And thirdly, replenishing the fund. A petty cash fund is established by writing a check. A company will firstly write a check for the amount of the fund. They will then cash the check. They will then place the check under the care of an employee. This employee will be known as a custodian. A journal entry is then made to record the establishment of the fund. Suppose that a company cashes a $100 check to establish a petty cash fund and gives the cash to the custodian. It would be recorded in this journal entry. Making payments from the fund. Payments are usually made in two ways. Firstly, cash is taken from the fund to make the payment. Secondly, employees will seek reimbursement from the fund. However, no journal entries are made unless they are recorded once the fund has been replenished. Replenishing the fund. Once the cash decreases, the fund must be replenished. This is done by counting the money, ensuring that a check has been cashed to bring the total cash in the fund to its original balance. Suppose that a company prepares the following report. The report shows that funds need $85 to be fully replenished. As a result, the company would cash for $85 to replenish the fund and record as follows. The entry will then increase in the three expense accounts: postage, supplies, and miscellaneous. Cash short and over. Cash does not always equal the amount of receipts. Therefore, this discrepancy is charged to an account called cash short and over. To illustrate, assume that the company counts only $13 of cash in the fund before replenishment. In this case, a check must be written for $87 to be fully replenish the fund. However, as illustrated, there is a difference of $2, which is then charged to the cash short and over account as follows. The cash short and over account is then debited, which indicates an increase to expenses. Thank you for watching.